Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today would typically be Michael Becker, smartest guy in the room, but he is on another due diligence assignment, looking at another property for his team over at SPI. So we wish him a lot of success pursuing another transaction. So that's good for him. So we're going to start the podcast just in a second, but James Eng is with us. So James, how are you?
Good. Thanks for having me, Paul.
So, James, what's going on in the Old Capital world?
A couple things. At the end of May 23rd, we're going to have a webinar on how to finance multifamily. So a little multifamily finance 101. So you can go to Old Capital Podcast to register for that. And then also Thursday, September 13th is our conference over at AT&T Center. So if you have not registered for that, you can go on the website as well to register for that event. So those are what's upcoming.
That's great. Some great information. James, thanks for letting us know a little bit about that. But that is the premier event, the Old Capital Multifamily Conference at the AT&T Stadium. Again, we'll have Roger Staubach there. Roger, who has been in the commercial real estate business for a long period of time, is kind of our keynote speaker. But we'll have a lot of events. So if you have a chance, pay for a ticket to come down to Dallas from any place that you live, whether it's American Airlines or Southwest. Get to Texas and get in the game. Get in the game. So in the podcast today, we have two of our friends that have recently purchased a property in the Texas area. It's actually in, I would say, a secondary tertiary market. And we're going to talk a little bit about how they did it. And so in the podcast, they're friends of each other. So I'm going to have Larry Troy. Larry, how are you?
Good morning, good afternoon. It's been a great day.
Thanks, Larry, for coming in. Also, Crystal Lee Thomas. Crystal Lee, how are you?
Hello, I am outstanding and fantastic. Thank you for having me.
So we're missing your husband today. That's David. And David couldn't make it because he has a full-time job. You have a full-time job, and you have being a full-time mom with brand new twins.
That is correct, yes. David could not make it. And yes, my twins are full-time job. They're fantastic. Twin boys. They are 16 months old now.
Wow. So you had when you had bought your multifamily property, you had just had them, and they weren't even a year old, huh?
Actually, they had just turned a year old right when we started this transaction. So
this whole process.
Yeah.
So that's great. So Crystal Lee and Larry are in the podcast today. They're going to be talking a little bit about buying their first transaction in a secondary/tertiary market. So let me throw it over to James and let's get it going.
So I always like to start with sort of why people get started in multifamily. And so maybe each of you have a different why, but maybe the same. So maybe let's just start there. And Larry, if you want to kick it off and give us a little bit of your background and then how you sort of discovered multifamily, and then we can jump over to Crystal Lee.
Sure, James. Thank you. I spent 30 years in industry working for telecommunications company, going up through the ranks from a field engineer to a project manager. And my major connection was computer communications for the government. And when I got out of that and retired back in 2001, I started dabbling in the stock market. I was doing okay. I'm getting 6 to 8% average, but it wasn't enough to keep me going. Mm-hmm. So I started looking around and then listened in on some other podcasts and radio shows and took a few seminars here and there and finally connected with another organization here in Dallas area. Went to their 2-day seminar and all of a sudden I heard about multifamily. Well, being retired, I always had a problem getting a mortgage because I didn't have a W-2 income. But multifamily, I didn't need a W-2 income. So I said, this looks like something I can do.
This might be a good spot for you to land. Okay.
That's a good point.
Crystal Lee, do you want to tell us a little bit about your background and sort of how you got interested in multifamily?
Sure, absolutely. So got started investing in real estate in around 2010 and started out in single family. And, that was my mindset, was I thought I had to start small. And my husband, David, and I, we did some training and worked really hard at it for about a year. We were struggling. It just didn't work for us. We ended up with one single family home over a year, and we were like, this is going to take us forever. This is the whole point of this, is to help us build wealth. I mean, that's a large appeal about real estate investing is, you can build wealth and you can build it fairly quickly and in a smart way. So we were looking for something more. We were dissatisfied with where we were with our goals and knew that single family, the way we were doing it at least, wasn't going to get us there. So we started doing some research and, similar to Larry, listening to, different avenues of instruction and word of mouth. And we heard about Brad Sumrock and heard about other people who had success, learning from him, and learned we could actually do these transactions. And it was not as difficult as we thought it would be. So just jumped right in, and it's been extremely successful for us. So
once you guys decided that this was going to be sort of your avenue of investment, what was sort of that first deal in terms of money on the table invested into a multifamily deal? Do you remember sort of the timeline there and sort of how you guys started? Was it passive as a KP? What was sort of that transition for you guys?
Sure. So it was actually very quick. We started as a passive investor first.
And what is a passive investor?
Sure. So a passive investor, you hear terms like a syndication deal, or, where you're investing your money with someone else who's leading the deal. So passive investor is meaning that there was a deal sponsor or a lead on an acquisition. They were responsible for overseeing the whole acquisition, the whole process. So they found the deal, they did the due diligence, they negotiated everything, they submitted the contract, and they had to raise capital to purchase the property. So I was a passive investor. My husband David and I were both passive investors in someone else's deal as a deal sponsor. And that was within our first 6 months of making the decision to be a multifamily investor. We were passive investors.
And how did you meet this person? Was it at one of these investment groups, or did you know this person before you gave them money? I mean, how did you meet this person that you gave X amount of dollars to?
Yes. So we met them actually through, Brad's training programs and with the networking events. So we knew them. We had relationships with them. We were running in the same circles, I guess you could say. We were attending the same events, and, they were also in some of Brad's trainings as well. So
there was a high level of trust that you had. Did you take a look at their financial background themselves? Did you take a look at their criminal background? When you give somebody $50,000 or $100,000, what comfort level did you have to be able to do that?
Absolutely. That is a huge trust factor, is huge involved in that. And outside of the relationship we had with them, I mean, I recommend a quick Google search can really show you a lot of things about someone. As far as doing like a criminal background check, we didn't do anything like that. Didn't feel like it was necessary, but it was very transparent. We knew where they were coming from. We knew the other acquisitions they had done. We knew their track record. We knew how successful they had been, and that was certainly a comfort level for us.
I'm similar to Crystal Lee. Back in 2010, when I really started to get into this, I had met Brad, and he was putting a deal together. So he was actually the first person I invested with. I was able to put $100,000 in 3 deals that first year. So I was lucky enough to have that available at that time. All 3 of those deals have since sold and made a good 100% gain on each one of them.
So, Crystal Lee, approximately how many deals did you invest in before sort of this deal? Do you remember?
Yes. Let's see. Five
passive?
properties.
Okay.
Yes. So it was just a little over 700 doors.
Okay. And then Larry, do you remember how many?
Before this deal, I was involved in 11 deals.
Okay. 11 deals.
4 of which had sold at that time.
Okay.
And a little over 1,200 doors.
Okay. So you guys had done, 5 deals and 12 deals. Now, what made you go to becoming a general partner now? Like what sort of in your mind switched, or what changed in your lives that said you should be a general partner now?
I've been working on the plan to get to be a general partner since 2010. I guess you call him a category B, a numbers guy. Everything's got to work. Okay. And so I've been analyzing. Sometimes they say, analysis paralysis. It's effective to me. And I finally said, no, I got to stop this. It's time to step up and let's go find a deal that we can do.
Okay.
I submitted in 2016 and early 17. I submitted 11 LOIs.
Okay.
I made it to best and final on 6 of them, so I figured I must be getting close. And then Crystal Lee and I sat down and talked, and with David, and we said, between us, we've been both shooting at this and not quite making it. So maybe it's time we join up and look a little further out. And that's when we kind of found Wichita Falls.
Exactly.
Yeah, go backwards one time. Larry, you had invested in 11 transactions, 11 multifamily transactions that somebody else was the key principal on, or the managing.
That's correct.
Managing member on. Different time, different transaction. But your analysis paralysis. You're a guy that actually looks at the numbers. Is probably pretty good with the Excel spreadsheet. How did you get a comfort level just to invest in properties? And did any of your transaction actually lose money?
None of the transactions lost money.
Okay.
2 of them didn't make a great deal, but they all made at least our money back plus at least 25%.
Okay.
That was the worst deal, if you will. But most of them were at least 100% too. We're upwards of 100% back. So instead of putting 100,000 in, I got close to 200,000 out.
And so, in what time frame from the period of time? Let's think of just one deal. From the period of time you put the money in to the time you actually got the money out, was that 7 years, 10 years?
It's anywhere between 2.5 and 4.5 years.
Okay, that's pretty good.
Yeah.
So you guys team up on this deal or start looking at transactions together. And then let's maybe jump into this deal that you guys actually acquired. Tell us about sort of what you liked about the deal and sort of that initial offer stage, because it seems like you guys had submitted a lot of LOIs, gotten to a lot of best and finals, but what was different about this transaction?
Well, I would say that it was a good price point. Okay. It felt that, not feel, you can tell I'm not a numbers person because I use feelings, but it was very appealing from the standpoint of the price that the seller was requesting, plus the deferred maintenance and the opportunity to make an immediate impact with some minor aesthetic enhancements was there. So, there was some meat on the bone, as they say, that would give us an opportunity to, be able to go in and make, some immediate changes that would really enhance the property and make it more comfortable for the tenants to live there. And going back to a little bit of being a passive investor first, similar to Larry, we always had the goal of being a deal sponsor, being the lead on a deal. And we'd been looking, same as Larry, and we had submitted several offers and we had made it to best and final on a few of them. And when we teamed up with Larry and we were just like, okay, this works, the numbers work. It's not in DFW, but it's a quick 2-hour drive from Dallas, and the numbers worked, and there's just opportunity there for it to work with our business plan.
Why do you think the seller chose you guys on this deal?
Well, I think there's several reasons why. Few of them would be the fact that what we brought to the table, we brought a team of people to the table. We were able to show a very robust resume with our team, including Old Capital, including Brad Sumrock as our mentor. Brad has a great reputation out there. Old Capital has a great reputation. We also had broker representation on our end, and they had great relationships already established with the seller broker as well. And also, being able to show a very buttoned up, thorough offer, knowing that it was going to be very quick, that we were going to be getting on our due diligence right away, that we already had that lined up. We already have an attorney. We already have all of that. It wasn't like we were going to have to spend all this time doing all of that. So I believe that the seller chose us for all those reasons.
Okay. No, that's great. I just remember, do you remember what day you got in contract or what month you got in contract?
Yes, it was November 2nd or 3rd.
Okay.
Yes.
Okay.
Yeah,
That's
it was
the
right around
LOI.
there.
We actually got into contract on the 20th.
Yes.
Yeah,
The
yes.
LOI was accepted.
The LOI
Okay.
was accepted
Right around the beginning.
right before.
Okay. So this is a little bit different transaction just because it is a smaller market. And so we were trying to get sort of, most people have financing terms, term sheet or sort of letter of recommendation put together. So Paul and I were actually in Florida at that time. And I remember your buyer burger calling us and saying, we got to get this in tomorrow. So we pulled aside from our dinner and got it done. So I'm glad that we give out a lot of term sheets. We give out a lot of letter of recommendation sometimes for different clients. So it's always good to see that it goes somewhere and that it helped you sort of win that transaction, because I think Paul had maybe worked a little bit with the seller on some previous transactions. Sure. So just sort of leveraging, our past transaction experience and having a comfort level, not only with the buyer's broker and sort of your equity and key principal roster in terms of experience, but then also them getting comfortable with the debt. And so.
Absolutely. And
just like any transaction or any relationship, you have a comfort level with the people that you've been working with in the past. Mm-hmm. And that seller, we had done a number of transactions with. And so when they saw that we were recommending your group to buy it, they had a little bit less nervousness, and they understood that we were supporting you in this transaction. So I think getting a letter of recommendation from your banker, your lender, is a key thing. So just not the terms of the loan, but actually some verbiage about what you guys are all about. So I think that's a good thing to have. And then, James does that type of stuff. So I think that's great.
Yeah, I mean, it really separates you from, instead of the 20 and the first offer and 10 in best and final, you guys had been there. So it's all those small things, because a lot of times at the end of these transactions, the difference between first and second place is, $25,000 or $50,000. Mm-hmm. So making all those small incremental things can make a huge difference. So let's jump into a little bit more detail on this deal. So you guys get under contract, and then the next 60 days, sort of take us through, what do you remember during those 60 days in terms of...
And before you do that, how far is this property away from you, and how the heck did you find a property that far away?
Well, it's actually 118 and a half miles from my house.
Plus or minus.
Plus or minus a half, yeah. But we found it, or I found it originally, and I brought it to Crystal Lee and David, and I found it on Brad's box. And I took a look at it, did a real quick analysis of it, and it turned out to be one of the Saturdays of a road trip. And for one reason or another, I got delayed and couldn't get downtown Dallas in time. So I grabbed my wife and we said, we're going for a ride. And we drove up to Wichita Falls.
118 miles.
118 miles one way. Went and drove by the place, did our drive-by. Could see there was very little deferred maintenance on the outside around this property. It looked good, looked clean. The area was nice. There's a lot of shopping and everything else. It's got all the local area amenities that you would want for an apartment within walking distance. Mm-hmm. So I said, this looks good. And like I say, I brought it back, did a little more analysis on the numbers, got a hold of Crystal Lee and David. We sat down, ran some more numbers, and set up an appointment to go up and visit the property. Then everything just started clicking together. Mm-hmm. It just looked good when we got inside. The insides were pretty much already upgraded. A lot of granite countertops.
Did you feel that there was a lot of activity on that property? Was there a lot of people looking at the transaction with you?
Actually, there weren't. Uh-huh. There was only, as far as I can tell, there were only 2 bidders on the property. Mm-hmm. And it turned out the other bidder was there the morning that we were there.
Yeah, so that's usually what happens is the broker schedules one time that he drives all the way up, 118 miles. So then you can kind of figure out, is there an appointment before yours and is there an appointment after yours to kind of judge what the activity level is on the property in these secondary, tertiary markets.
So once you guys sort of got under contract, anything during that 60 days in terms of the acquisition process, any surprises that came up? Anything that as a passive you didn't have to deal with, but now as a general partner you were having to deal with?
During those 60 days, dealing with the banks and getting the loan was an interesting process. That was the first time for me, obviously. Mm-hmm. And I didn't know what to expect sometimes. Okay. I get these calls from James and saying, we need to do this now.
Mm-hmm. Yeah, I would say, as far as surprises go, going into it being our first deal together as a deal sponsor, we knew there was going to be a lot of things that we had never encountered before. I knew there was going to be a lot of paperwork. Yeah. I would say the amount of paperwork was a little surprising, and then it coming from multiple different sources. Right. So, there would be a few days that would go by and we may have received 5 emails from each place asking for paperwork, in every email. And it was just a lot of, keeping track of it. And did we sign this? Did you sign it? Oh, I thought I signed it, and so the paperwork was a little bit of a surprise, just the amount of paperwork.
What kind of paperwork was it, James?
So on this transaction, we actually used the Freddie Mac small balance loan. And so you're able to get a non-recourse loan, 75%, 1 year interest only, 30-year amortization. So a very good execution for property in Wichita Falls. And so given that I think Larry had signed on one Fannie Mae loan previously, and Crystal Lee had been a passive in multiple deals. Fannie Mae, this is more of a pre-review market for them. And so Freddie Mac was the best execution in terms of loans. And so they do have a little bit more paperwork, but I mean, they're really looking to the property, right? So Larry mentioned this earlier in the podcast about how, he didn't think he could qualify for $300,000 or $400,000 mortgage, and now he's going to apply for a $4 million loan.
It's amazing.
It's outstanding. Yes, absolutely.
And so we're going in for a $4 million loan. So there's going to be some paperwork, but
Yes.
it's going to be really about the property. It's going to be more specific to your balance sheet and not your income statement. So they're looking at your balance sheet to making sure you guys qualify as a sponsorship group in terms of net worth and liquidity. So
So he couldn't qualify for $300,000, but he could qualify for $3 million. I wonder if he can qualify for $30 million.
I'll have to look into that.
We'll work on it.
So Crystal Lee and Larry brought in one more key principal on the deal to really solidify the team, and got, we need a net worth above $4 million and post-close liquidity of over $400,000 for a $4 million loan. And so they sort of built their sponsorship team and then filled out the paperwork, and we were able to, get the deal approved on the Freddie Mac side. And so anything else sort of in due diligence, or anything else, maybe some tips for people who are going through that process or about to go through that process?
Now, did I see you up on a roof, Crystal Lee?
I actually do not have the proverbial roof picture this time, but there will be a roof picture another time. Yes.
Larry, I saw you up on a roof.
Yeah.
Yeah, I had to
didn't
go
get
up.
to go
I
that time.
went up because we did a roof inspection actually before we submitted the LOI.
Why was that important?
It was a flat roof, and I could see some damage around the periphery of the roof.
What kind of damage was it?
The metal coping was bent and raised in certain areas, and I just was afraid that would create a problem, and it was when I got up on the roof. In fact, that's starting this week. They're replacing the roof on the property because it was only 12 years old, but had water underneath the covering already. So, and some bunch of poor repairs. So
when you saw that, did you say to the seller, "Hey, listen, I'm going to need for you to replace the roof," or did they
we
file?
bid that into our bid, and we knew that before we submitted the LOI.
I see.
That was already built in.
So during the process, you do your physical inspection, you sort of go through the process with the loan. There's a lot of paperwork, but with Freddie Mac, everything goes up to Freddie Mac for approval. And so you guys were very prepared sort of at the end.
Right.
Because there's a lot of hurry up and wait type of stuff in loans. So you get the call and it's sitting on your desk and everybody's waiting for you.
Right.
And so what was that last couple of days like, in terms of you're having to obviously, talk to your equity guys, you're talking to me on the debt side, and then you're having to sort of manage the property management team that's going to take over the property.
Right.
And
Yep.
so there's a lot of moving pieces. Do you remember any of those? I have a couple of comments, but I want to see what you remember.
It was an exciting blur, I'll put it that way. When you're going through a transaction that is, this large, and you have investors that, you want to do a good job for, and you have a team of people that are supporting you and have helped you get this far, you can't help but lose sleep at night just because, you're thinking over and over again, okay, have we done everything correctly? Is there anything else missing? And, are all T's crossed and I's dotted, because you want to succeed and you want to get it across the finish line. And so it was, the last few days was just, it was exhilarating. It was exciting. It was, stressful. There was a little bit of stress. And then you're just kind of wondering sometimes, like, oh, is it going to make it? Is it going to work out?
Yeah.
Did you have hard money involved?
We did. Yes, we did have hard money. Yes.
Yeah,
Wow.
We had hard money involved right from day one.
Yes.
And then it increased at the end of due diligence, and then it increased again when we had to get an extension because we weren't quite ready at the original closing date.
So before you actually took ownership of the property, how much money do you think you had at risk?
$125,000.
25,000.
Yeah, that's a lot of money. That's a lot, you know.
It is.
So, you know, the lender is such a key piece of the equation. I mean,
Absolutely.
Yeah.
you have the investors who bring in the equity into the transaction, but it's really the lender who's bringing in 75%
of the money.
And so you got to jump through hoops to get the one biggest partner to help you.
So on this transaction, I think it was January 30th that we received approval and pushed over money to rate lock the deal. And we went back to the seller and said, can we get a couple extra days? No. So we had to turn around, and so we rate locked, I think, on a Tuesday. And then we had to close on Wednesday, which was the last day of the month.
So they wouldn't give you.
They wouldn't give. So we had already used one extension.
Correct.
And there was not, I don't think there was another extension built into the contract.
No,
so
there
we
wasn't.
couldn't push over another 25,000 on this deal. They get another 15 days, which is pretty standard. And so we called our friends at the closing department to make sure it got there. So it was a little stressful, but
It was
the money
stressful.
showed up at the title company.
It was stressful to the point when you called for the rate lock, I actually had voice paralysis, and you had to answer for me. Couldn't answer to say yes.
So when we get on all these Fannie Mae and Freddie Mac calls, we'll jump on the phone and just sort of run through the terms one more time to make sure everyone's on the same page. And so we got Larry on the phone, ran through the terms, and I don't remember that, but is that what happened? Like
That's exactly what happened. I just
I was like,
$4
Larry,
million,
are you
$4
there?
million.
Right. It was definitely a crazy time. And then James texted me when everything was closed, and it was just so casual and nonchalant, and it was just like, okay, it's done. And I'm like, wait, like what? Like we
it
closed?
really?
Like
Yeah, is it
we're
done?
totally. Are you serious? And so it was quite a trip for real. Yeah, it was a lot of fun.
So you guys closed January 31st. Now we're 3 or 4 months out. How has the transition been at the property, and sort of what have you guys done so far at the property? Obviously, you're working on the roof, but anything else in terms of management, operations? Any tips for guys as they transition from acquisition to ownership day to day?
I have to say that for the day-to-day operation, if you're first time into this, you really have to understand your management company and understand how they're working, because I find I'm spending a bit more time than I expected to be for these first 3 months, daily, checking up on what they're doing and where, again, being a numbers guy, I'm looking at the sheets and I see, where'd this one come from? So
How much rehab are you guys doing in the first year? Are you expecting to do?
the main rehab is all external.
Okay.
As I said earlier, the 90+% of the units have already been upgraded. Granite countertops, cherry wood cabinets, the faux wood flooring.
And what do these tenants do for a living? What's the general consensus?
It's a mix. The majority of these units are one-bedroom units, so it's a lot of single parents who don't have the kids. The kids come on the weekends and kind of a thing. Some students, because you've got
Midwestern.
Midwestern State
State
University.
is there, and there's another college in the area too. There's a few people from the Air Force Base.
Shepherd.
Not many.
Yeah,
Shepherd,
Air
because that's on the opposite side of town. So it's a ways for them to travel. Then there's a large banking distribution kind of center
Yeah.
right there, right around the corner. So there's that, and some medical work
Right.
in the area.
So hardworking people
Hardworking
Yes.
people, definitely $40,000, $50,000
a year.
a year
People.
people.
Any affordable housing on the property? Do you have-
No.
Yeah. So no Section 8.
No Section 8 or
So just market rate rents on the property.
that's right.
Okay. And how many times a week, Larry, do you drive the 118 miles up to Wichita Falls?
Since we took over on January 31st, I've been to the property twice,
Really?
and it's May.
Wow. That's pretty good.
Any other lessons learned in that first couple months? Keep on top of the management company. Really work on the rehab portion of it. Anything else on the first couple months that you guys have learned?
Well, one thing that Crystal Lee reminded me about earlier today was the fact on the takeover, we didn't realize the computers were going to be taken out because they weren't listed as property anyplace.
Right.
And that was one of the things that the previous owner, why he wouldn't continue, because he had taken them out the day before. They were gone on the 29th of January.
Yeah. So, I would say that some of the biggest lessons I've learned on this is staying organized and having great note taking. And, you're going to be meeting with a lot of people, especially after the takeover. I mean, it's little simple things, making sure you have everybody's, first and last names and how to reach them, email addresses, cell phone numbers, understanding their chain of command. If you have a question that needs to be asked of the, leasing manager, do you go to her directly or do you go through someone else to find that information?
And how many units in this property again?
124.
And how many employees on the property?
There's full-time maintenance, there's a full-time leasing,
And a
then
part-time
there's
manager.
Part-time manager, so, yeah.
Is that enough staff, too much staff, or like Goldilocks just right?
I think for now, I think it's working really well.
Yeah.
Yeah.
What's your occupancy right now?
We're just right at 90%.
Right at 90%. It's been hovering right there. It goes up a couple of points, goes down a couple of points.
Is that what the market is right around 85?
Yeah, in the
90%?
area is 85 to 92.
Yeah, so you're
So
up.
we're right in the market, yeah.
That's great.
And then do you think, is the business plan really to come in? How much upside do you think once you've done some of these rehab items, do you think there is in rents? And sort of, can you give us an idea of sort of what it is today and where you think you can take it?
Well, what we're doing is we're working on getting rid of the loss to lease. That's one of the biggest areas that we had. The previous owner had
And what does that mean? What's lost to lease mean?
loss to lease is basically the market rent is set at one number, but the leases are set usually at one point, and then as the rent goes up, you don't increase their lease because that's a contract, and so you have a loss to the current market rent. Mm-hmm. And at the point we took it over, there was a fairly good number there. And our objective is obviously to burn off as much of that as possible. It's not Dallas-Fort Worth, so the rent increases are not going to be anywhere near what they are in this area.
Yeah, you couldn't go in there and rip off a Band-Aid and all of a sudden on renewals, try to raise it by $100 or $150 a month. You would have had a mutiny on the property, and that wouldn't have been good.
We would have been down below 50% real quick.
Yes.
Yeah, so that's one of the things in the secondary, tertiary markets. What you don't want to do is, even though you're coming in as a new buyer, and you think you can push rents like you can in some of these larger urban areas where the elasticity can be there to try to spend $3,000 or $4,000 worth of rehab and then try to boost rents up. You just can't do that in the smaller markets. You will find yourself with a lot of vacancy almost immediately. And then you start getting a bad reputation. So just like lobster, just start turning that heat on higher and higher and higher. Mm-hmm. And then that's the way to try to increase rents. Just don't try to throw that lobster in the boiling water. It won't work.
Absolutely. And, speaking on that point is that looking back on 2 or 3 years ago, if we had tried to do this transaction without the relationships that we have built over the time and without the knowledge that we have and without having the team of people put together, we probably wouldn't have been successful with it. So having an education, having training, having a mentor like Brad to help us navigate through those numbers and go into something like this, into a tertiary market and put a business plan together that does make sense and that works, that's something that we wouldn't have been able to do this if we hadn't had that.
Now that you've completed the acquisition on this one, what are your plans for the rest of the year? Are you going to focus in on this one? Are you going to maybe look for maybe one more property this year? What are your plans for the rest of the year?
Well, we are. We've been focusing on this one. We've spent the last, few months focusing on this, and we feel like we're in a good place with our projects and with our, communication with the management team. And we have a we have a very clear timeline on which projects are priority and when they'll take place. So we're looking together, partnering together on another deal. So.
And I like this question, but it's sometimes hard for people, but is there anything that you guys do daily, or any habits that you have that you would recommend maybe other aspiring multifamily investors have while you're going through this process in terms of looking for deals? Do you guys have any secrets out there?
I try to look at least 3 deals a week.
Okay.
And try to analyze. Even for the last 3 months, I've been doing that.
Okay.
Even though I knew I wasn't going to be jumping on one, but I try to stay on top of what's going on in the market area, what other deals are coming together, so that I can understand.
Here in DFW or surrounding areas, how do you sort of narrow that? 'Cause
I
there's a lot
don't
of deals
narrow
out
it down.
there.
I've been looking in the 75 to 150 unit range.
Okay.
So I'll go through the box and look what's there, DFW, other sites in Texas, other sites in the U.S. And I'll also go out to LoopNet and some of my contacts at some of the brokers that send me information.
Any other habits, Chris Lee?
So, for an aspiring multifamily investor, obviously making sure that you're doing some sort of action every day that will enhance your path and having a clear goal. And so, one of the things that works for me that helps me navigate through all of this is every day when I wake up is I start from a place of gratitude. So I think of a few things that I'm grateful for. And I know that may sound kind of cliche or cheesy, but the reason why it is a healthy habit for this is that it can get discouraging when you are putting yourself out there and you're putting out, you're putting in offers and you're putting out LOIs and you're not getting them accepted. And, you're seeing like, man, got beat out by, just $100,000 or just a little bit, or could we have tweaked numbers? Could we have, should we have done more research? Should we have, shoulda, coulda, woulda. And so, maintaining a positive outlook and not getting discouraged, and trying to fuel that energy into, okay, let's move on and, let's get the next one. And having that patience and that positivity is something that I think is extremely important.
That was good. I like that.
Yeah, you have a full-time job. Your husband has a full-time job.
Yes.
You guys both have full-time children to
Yes.
take care of. How much time during a week or a month are you taking a review of the property itself? I mean, do you drive up there once a week yourself, Crystal Lee? Do you put a lot of faith in the management company? You put a lot of faith in Larry, who's really kind of you guys work together as like an asset management team.
Right.
And so it affords you the ability to, I would think, take care of, this is important, but also your family is important too.
Absolutely. And this goes back to, if you are going to partner with someone on a deal, have a partnership that makes sense. So that's one of the reasons why the partnership that David and I have with Larry works so well, is because Larry is semi-retired. And so, he does have more time available. And so he is the main asset manager on this transaction. And so as far as physically driving there, we've been out there a couple of times, but we trust Larry as our partner to oversee all of that. And then we do also have regularly scheduled calls with our property management company every other week. Right now, just as we're getting everything off the ground, and then those calls will taper down.
No, that's great. I mean, I like going back to sort of the habit of the gratitude and bringing that through the rest of your day. So as you do that in the morning and bringing that through the rest of your day, I think, I'm not going to say real estate investors are cranky, but they just, you'll run into a couple of different characters in real estate. And so if you're able to bring that and portray that, attitude, and just people get to know you and like you and trust you, then I think that comes across well, especially with other people in the industry. So,
yeah, I really want to see people that have good attitudes succeed. The people that don't have good attitudes get kind of shuffled to the bottom of the list. And that, we like to do business with people that are appreciative of what we do, not
Absolutely.
the ones that try to not work with us. So we appreciate you guys doing the great job you're doing and helping out your tenants and your investors. Your investors are happy right now, I would imagine.
Yes.
You guys are great leads, great people to oversee the transaction. If somebody wanted to get a hold of you, kind of learn a little bit more about what you do, what's the best way for them to get a hold of you? Like an email address?
Yeah, usually the best way is email. So
We actually have an email that we both can see.
yes. So
Which is ttrem.info@gmail.com.
One more time, because I want to write this down.
Sure. ttrem info@gmail.com.
That sounds great. James, any final thoughts?
No, I think that's great. I mean, I think you guys really stepped up and took action on this deal, and appreciate you guys coming in to the podcast.
well, thank you so much for having us. It's been a true honor. Like very, very grateful to be here.
Yeah, thank you very much.
All right. We appreciate your business. We look forward to seeing that $30 million transaction,
Yes.
Larry, coming down the pike. Again, Larry Troy and Crystal Lee Thomas, we appreciate you coming in. James Zhang, thank you. I'm Paul Peebles. Have a great day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.